Welcome, everyone, to the first of our two-part series on the financial implications of divorce. I am Laura Lampron, Marketing Director for Nisivoccia, and I'm happy to announce our panel here today. Moderating today's webinar is Harlene Stevens. Harlene is a CPA and a tax manager with Nisivoccia. She focuses on individual and business tax planning, as well as leads our specialty dental segment. We're pleased to welcome Matheu Nunn from Einhorn Barbarito and Alyssa Engleberg with Donahue, Hagen, Klein, and Weisberg, both specializing in family and matrimonial law. Feel free to put your questions into the Q&A or the chat box at the bottom, and we'll answer them as they come in. And now I'm going to hand it off to Harlene because the panel has a lot of information to share with you today, and we want to get it all in. So Harlene.
Hi, everybody. Thank you so much for joining us. So we have a lot to talk about today in a very short period of time. This is part one, implications of divorce. We're basically going to go through some items that may occur to you actually before even getting married. And we think that this is, helpful to people who are planning to get married, or maybe who are living with someone, who have children who are planning to get married. It's a lot of good stuff. I'm going to have Alyssa and Matt will do most of the presentation. They're going to talk about it, and I'm going to chime in with some financial and tax implications. So please, as we said before, if you have any questions, put it in the chat, and we will try to answer them during the webinar. If not, leave your information and we'll reach out to you after. So Alyssa, Matt, I'll leave it to you to get started.
I think Alyssa is going to be discussing cohabitation agreements first, but on the advertisement that went out, we put Murphy's Law on there. And maybe some people thought that meant like a law that Governor Murphy was involved with. It has nothing to do with Governor Murphy. It's whatever can go wrong will go wrong. And so one of the purposes of part one of the seminar is to talk about ways to, plan for, not hope for, right? No one wants to get divorced. No one wants to live with someone and then have the relationship break up. But it happens. It happens between 45 and 55% of the time, depending on the age of the people in the relationship. So we want to give you some tools and maybe a different way to look at this otherwise taboo subject. It doesn't need to be taboo. And in fact, if you plan the right way, hopefully you can avoid paying Alyssa and I, 10 to 15 years or 20 years when you go through a divorce. So sorry to digress a bit, but Alyssa, I'll turn it over to you.
Thanks, Matt. So the first thing we're going to talk about is just some, as Matt said, planning stages. If you're in a relationship with someone, you're not married yet, but maybe you're planning to buy a house with them or have a relationship with them. And what can you do really to protect yourself in the future? So there's something called cohabitation agreements, which really are not widely well known, like prenuptial agreements, but they differ in that a cohabitation agreement, it's a contractual agreement between unmarried individuals. It can outline their rights, responsibilities, future expectations. Primarily, it relates to when a couple is buying a house together, and it outlines, what their responsibilities may be for the household expenses, and, most likely, what would happen if the couple breaks up, or if one part of the couple passes away, what happens to that property. And the agreement can outline all of those things. So the cohabitation agreements can also address, like I said, how expenses are going to be paid for the house. And it can also address financial support, which is known in New Jersey as palimony. Palimony is a promise to support someone who is not your spouse. In 2010, actually, there was a statute passed that required all palimony agreements be in writing. So you can have that as part of the cohabitation agreement if you want to include that writing in there, or you could renounce palimony altogether so it doesn't even become an issue in the future, or other type of equitable remedies that, unmarried couples may otherwise be entitled to make if the couple were to break up. For example, there's something called unjust enrichment. If you're living together in a house and you are pouring in all this sweat equity that you can't prove with money, but you're putting in all this effort to upgrade or renovate and increase the value of the house, you may have an argument there. But if you have a cohabitation agreement that addresses that, you may not be able to make that argument, or may carve out, how that argument is to be made. So then obviously the next question is whether these agreements are enforceable. And I would say in short, the answer is yes. And Matt, you can chime in here. But
so I just want to make sure, if you have a cohabitation agreement that also addresses palimony, just be aware that you will need to have counsel to address the palimony issue, meaning the statute that requires a palimony agreement to be in writing also requires that independent counsel be retained to give advice regarding the palimony. And I say that with an asterisk. There is a case pending in our courts right now where the State Bar Association, among other association and litigants, have argued that there shouldn't be a requirement to have two people who want to enter into an agreement like this to have legal counsel. It's unfair, it's unduly burdensome. They may not have the resources to each hire their own attorney to do it. So as the law stands now, if your cohabitation agreement is also going to say something like, Alyssa agrees to pay Matt, $3,000 a month of support for every month that they're together, after their relationship ends, that type of promise in a cohabitation agreement requires consultation with an attorney.
Yeah, and that goes to the point of, whether it's enforceable, right? If you have palimony in a cohabitation agreement, as Matt said, the statute requires they each have independent counsel. You can't even go to an attorney together and enter into this agreement. It would have to be, you'd each have to have your own separate counsel. But other parts of the cohabitation agreement may not require your own counsel. Like I said, the distribution of a house, of how that's going to be divided, it needs to be in writing, but you don't need to each have your own individual counsel. But look, an agreement written by two parties on a cocktail napkin and signed by them is going to face a lot more challenges than if two parties do go to an attorney and have a formal agreement written out, and it will usually address everything in there, so there's not, there wouldn't be holes in the future. Cohabitation agreements, they can address, and we'll get into this more in prenuptial agreements, but it can address future custody or child support. That doesn't mean two unmarried people can't enter into an agreement for custody and child support. If they have children together and break up, they can then enter into an agreement and file it with the court. But you can enter into, well, if we have children in the future, this is what's going to happen. That can't be part of any type of agreement. It's against public policy. As the law presently stands, and I know that there's been efforts to change this, you can address household pets even, who's going to keep the pets, and how that's going to be divided. That can be addressed in an agreement. So one of the questions that I came across when I was preparing for this seminar is whether the parties can negotiate and put into an agreement claims for, deduction for mortgage interest and real estate taxes. Can that be something that can be negotiated in an agreement, or is that controlled by the IRS rules? And is it something that, can't be, you can't decide amongst yourself, the IRS dictates that. So I think, Harlene, you are going to speak a bit to that.
Right. So basically, for the mortgage interest, if you both, if you pay the mortgage interest, then you can get the deduction for the mortgage interest. And the way the parties can work that out is they can split that out, they can split it on their tax return. They can basically take it to whoever it benefits them the most. With what I do with my clients is when I have this circumstance, I'll see who gets the better bang for the buck in terms of the deduction of mortgage interest and taxes. That's the way I will look at it, because the standard deductions today, like let's say it's, there is a woman, I'm just going to say woman because it comes to mind first, and she has children and she's filing head of household. Her standard deduction is going to be higher than someone who's filing as single. So it might be more advantageous to the person who's filing as single to take the deduction. So I would really look at it and say, you know, who's getting the better bang for the buck in terms of the, you know, cohabitation agreement while they're, you know, while they're living like that to get together. Now, in New Jersey, for real estate taxes, you can only get a deduction for real estate taxes if you own the property. So that's not necessarily the same for federal, but it is for New Jersey. So let's just say that someone lives in a house and the wife owned the house, not the wife, the woman owned the house, her partner is living there with her, and the partner also pays the mortgage interest. Because they're paying it, they could get the deduction for the mortgage interest. But in New Jersey, the real estate taxes have to be, you have to actually have an ownership in the property.
So yeah, that's important to note, right? You can't put in an agreement that someone can take the real estate deduction if they're not an owner on the property, if the law doesn't allow for it. So your agreement can only go so far, but it can guide you. As long as the law allows for it, it can at least provide you some certainty there. So why does someone need a cohabitation agreement? I think Maddox said earlier, you know, Murphy's Law, if something can go wrong, it will go wrong. And so you don't want to be in a position that in the future, something goes wrong and you don't know even where to begin and what arguments can be made and what your rights are. The cohabitation agreement at least would outline, give you some level of certainty there. It does add that extra layer of protection. And I think they're becoming more common in this day and age. People are not so rushed to get married anymore. They're living together first. They're buying property together first. Or if they went, you know, maybe they're older and they're widowed or they're divorced and they're not ready to rush into marriage, but they're in a relationship and they want to build that relationship and move in together. So a cohabitation agreement really is the way to go, really the only way to go, because you're not going to have a prenuptial agreement if you're not getting married necessarily. And if there's not a cohabitation agreement, then you're just left with whatever legal and equitable remedies are available in the law. For instance, you don't have a cohabitation agreement that outlines, you know, what exactly happens if the relationship terminates, who keeps the house, can there be a buyout? Then you're left with what's available at law, and the only remedy available is called partition. So initially the court has to see, well, can the property be divided in kind? Is it a large enough property that you can kind of divide it down the middle? Probably most couples that were in a relationship wouldn't want to do that. I mean, maybe you can do that with land, but even so, do you want to own land right next to someone that you just ended a relationship with? Probably not. And then if it's not available, like probably, you know, in a residence, a single family residence, then it would have to be sold. You don't even have the choice. You can't say, I want to buy this person out. The court would sell it and divide the proceeds, and that may be controlled by the deed, you know, how you own the property, or any equitable arguments that can be made in court. So I don't know, Matt, if you have anything else to add on cohabitation agreements.
I just want to say, I tend to see these, my firm gets a fair amount of these, myself included, and then some of the guys in our trust and estates department. I tend to see these more where at least one of the parties to the cohabitation agreement is divorced and has accumulated some assets and wants to, you know, now it's post-divorce, or both parties are post-divorce and they want to be in a relationship, but, you know, it's kind of one of those things like, you know, I'm never getting married again, but like, I want to live with this person. I love this person, but for whatever reason, maybe they had a really difficult, bad divorce. I don't want to get married again. And so, you know, they may have children. And so in an effort to avoid costly litigation and fights, you know, I'll have parties who come to me. It's, you know, I can only represent one of the parties, but, and it tends to be pretty amicable with a cohabitation agreement. It doesn't have the same taboo nature to it as a prenuptial agreement. But I tend to see post-divorce people who are moving in, have a new relationship, and they just want certainty. Like, if we break up, I don't want the house to have to be sold because, you know, I'm putting down more of the down payment. I'll buy the person out or something like that. And if you agree to it in advance, it's enforceable in court. And so you avoid paying people like Alyssa and I to go in and fight and litigate these types of things. I think there's a question.
Yeah, I just saw that pop up too.
Yeah, so I'm looking at the question and I believe, and I'll look into this, but I believe if the person who owns the house takes the property taxes. But again, you would want to look and see who benefits the most from it, because it could be that that it doesn't make sense in that case. But in New Jersey, basically, it has to be who owns the house. So really, you would want to take it, the owner of the house would want to take the deduction for the real estate taxes. Mortgage interest is a little different, but that's the way it would be with the owner of the house. Okay.
So I guess the question is, can you skew it? So if you're currently married, like, can you have one person maybe take more of the mortgage interest or something, because only the owner can take the real estate deduction if they're filing separately?
You could, but don't forget, for federal, you're only allowed up to a $10,000 tax deduction altogether, you know? So
I think
you know,
if you're married filing separately, isn't it is it 5,000?
5,000, exactly, right, would only be 5,000 each, right, exactly, married filing separate. So, you know, we'd want to look at that. So, but you know what, I want to just double check that, because I think for federal purposes, you may be able to take the 50-50 for the real estate tax, but I know in New Jersey, you have to own the property. So I will get back to you on that in terms of the federal deduction. Okay.
All right, does anyone else, if anyone else has any questions, then, well, I guess we'll move on to prenuptial.
Did another question pop up, or is that the prior?
Yeah, just the 50-50 split on the New Jersey, you have to own the property to get it. So, yeah.
So prenuptial agreements, this is the taboo subject, right? So you have your cohabitation agreement, the two of you are now living together, you love each other, you want to get married. Could you have a cohabitation agreement that carries into a marriage? It's an interesting question. It's never been litigated whether the marriage sort of subsumes the agreement or not. But let's assume you want to be cautious and conservative and you want to get a prenuptial agreement. And I can't tell you, and I'm not just saying this because we're in a seminar, but on more than one occasion, I've had a potential client come in and one of the first words out of their mouths are, you know, I don't want to screw over my fiance, but I need to be protected. And my response to that is, well, it's really great that you don't want to screw over your fiance, because if you do, you probably shouldn't be getting married to the person, right? So don't go into it with that mindset, meaning like you're putting your guard up and it needs to be an antagonistic thing, right? Because that's not the point of a prenuptial agreement, okay? People make poor decisions when they're hurt or upset or angry. And if anyone that's participating in this has been divorced, 99% of the times a divorce elicits all of those emotions: hurt, anger, you know, betrayal, etc. So if you don't have a prenup and you get divorced, you're making decisions in the context of a divorce where at that point you may have really an antagonistic feeling towards your spouse or soon to be ex-spouse. But if you're doing it through a prenup, presumably you're in love and you're going to get married and it's a happy time and everyone has their eyes wide open and can think clearly about the future. And so I favor them whether there's a lot of money at stake or not a lot of money at stake, because it really allows you to plan for the future and the potentiality that the relationship may not last. And so I want to start with what cannot go in a prenup, because it's a really limited to a few items, and the things that can go in a prenup are much broader. What can't go in a prenup? You cannot negotiate in a prenuptial agreement custody regarding future born children. Okay, so you can't, Alyssa and I couldn't say, hey, if we have children in the future, Alyssa's going to have sole custody, Matt's going to have no. You can't say that. Cannot go in there. It's against public policy, number one. Same related issue, child support. You cannot pre-negotiate child support. Why am I saying that? Because you can pre-negotiate alimony, including a waiver of alimony, but child support is different than alimony. Child support is support for children, right? So for the same reasons that you can't pre-negotiate in a prenup child custody, you really can't pre-negotiate child support. And then the last thing, the last broad subject that you cannot negotiate, you can't negotiate things that are illegal. What do I mean by that? So public policy in New Jersey is that parties can't contract to do things that are illegal. So for example, Alyssa and I in a prenup couldn't negotiate that, I'm going to engage in some type of tax fraud and she's going to keep her mouth shut about it, right? You can't negotiate those kinds of things in a prenup. So what can you negotiate? Pretty much everything else. Real property, disposition of bank accounts, including premarital bank accounts. If you're the beneficiary of a trust, that should go in a prenup, how that's going to be handled, meaning disbursements of the trust to one of the parties who's getting married. How to handle property that's acquired during the marriage, meaning whether it's acquired during the marriage with income earned by both parties during the marriage, or whether it's acquired by one of the parties' premarital assets. You can negotiate all of those things. You can negotiate how taxes are going to be paid, how they're going to be apportioned. You can negotiate things like deductions that we're talking about. So we have some prenups that are 50 pages long where people have trusts and significant premarital wealth and they want to protect those things. You can negotiate a waiver of alimony. And you may be thinking to yourself, well, how would people really know that at the beginning of their marriage? What if, they're both in their 20s and they don't have, two nickels to rub together? Why would they negotiate a waiver of alimony? Because maybe the two of them don't want to fight about it in the future, right? And so some of the requirements of a cohabitation agreement or a palimony agreement also apply to a prenuptial agreement. So number one, it's got to be in writing, okay? You can't have an oral promise for a prenuptial agreement. It won't be enforceable. There has to be, subject to an exception I'll talk about in a moment, there has to be a statement of assets and liabilities. My firm requires assets and liabilities. The statute requires assets. It has to be attached to the prenup, okay? And when we were all preparing for the seminar, we were talking about, well, how in depth does that need to be? I see people who come in and they have a one-page Word document that says Chase with a balance and, 401k with a balance. That may pass muster if those are the only two accounts that you have. We prefer when we do them to be a little more detailed and include account numbers, include exact amounts. I see a lot of people that come in and they have, sort of approximated amounts. And why is that important? Because generally speaking, prenuptial agreements are enforceable unless later on, once you're going through a divorce, the other party can prove really one of two theories. One, that they didn't enter into the agreement voluntarily. So they were under duress, and picture it. There's movies about this, right? Wife presents husband with a prenup 2 days before the marriage, meaning 2 days before the actual wedding date. There's no bright line rule, meaning the statute doesn't say it must be 5 days before a wedding or 2 months before a wedding, but you can imagine being under duress or feeling like you don't have much of a choice if 2 days before your wedding, you're presented with this agreement that says you're waiving your right to alimony and you're waiving all these assets. So just if you're ever getting married, it's a first marriage, second marriage, and you intend on getting a prenup or want to get a prenup, you need to start planning for it well in advance of your actual wedding date, because the enforceability of it and the length of time between the prenup and the wedding is somewhat inversely related. So plan and plan well in advance. The other grounds, it's a broad subject called unconscionability. So what does that mean? How do people determine unconscionability? Well, the statute tells us what's unconscionable. Number one, And this sort of relates to the statement of assets that's in the statute. If Alyssa and I were getting married and I wanted her to waive her interest in all of my premarital assets, and I wanted her to waive any potential for alimony, and I failed to disclose to her that I have $3 million of assets and no debts, and I only show her that I have $100,000 and I make $100,000 of income, and I present Alyssa with a prenup and she signs it, right? And Alyssa comes to learn, 10 years later when we're going through a divorce, well, I really had $3 million of premarital assets, and that's now grown to $12 million of premarital assets. And I was really making $750,000, not $100,000. Alyssa would have a very strong argument to set aside the prenuptial agreement, right? Because I lied to her, right? Not a good sign that I would lie to someone I'm going to be marrying at the outset of the marriage, but it does happen. And that's one of the grounds upon which a prenuptial agreement can be set aside. Now, there are exceptions to this. Alyssa could, in that example, expressly waive in writing in the prenup that she's waiving a right of my disclosure of assets and income, okay? When in this scenario, when I represent the Alyssa in this scenario, and she or he comes in and they say, yeah, my spouse, I think he or she has money and their family has money. And, they hired this attorney and they presented me with this prenup and they want me to waive everything, but they're not showing me what the assets are or what the income is. I say, run. I'm joking. I don't say run, but I say, I can't advise you to agree to that. You're essentially being taken advantage of. And if Alyssa persists and says, well, I love the person and I want to do it anyway, I send them a CYA letter, right? That's a legal term for cover your rear end. I send her a letter outlining to her that, hey, look, you're willing to agree to this. You're waiving things that you're entitled to in the statute. You're not doing this knowingly and voluntarily. And if you try to come back 10 or 15 years from now and say, hey, I didn't know about all this money that they had, by waiving that in the prenup, and you've been advised of this, it's not a grounds in the future to set aside the prenup. All right. So there's a corollary to this. It's related in the sense that, same example, I'm using Alyssa as an example again. Let's say I present a one-page attachment of assets and liabilities, and it's really broad brush strokes, and I don't really include everything on it. Like, for example, I don't include a house that I'm living in on it. But let's say Alyssa's living in the house with me, right? It would be difficult for Alyssa to claim that she didn't know that I had this house, right? Because she's living in this house with me. And so why do I say that? If the prenuptial agreement says Alyssa waives all real estate owned by Matt, all accounts owned by Matt, but the schedule of assets doesn't have the address that I'm living in listed on it, Alyssa may have a difficult time in the future saying, well, wait a second. The house that Matt was living in isn't listed on the statement of assets. My defense to that would be, well, yeah, but you waived real estate in the prenup and you knew I was living there because you were living there with me, right? So the final issue, and this one comes up routinely, and it comes up one of two ways. The final requirement or the final way that someone could prove unconscionability is, same example, let's say I have an attorney, okay? And I just shove this thing in front of Alyssa's face and say, oh, you don't need an attorney to look at it, okay? Don't worry about it. You don't need legal advice, okay? That's not going to be enforceable, okay? The statute specifically indicates that unconscionability can be established if both parties didn't have independent legal counsel. So there's a second scenario where this comes up. I hire Alyssa's attorney and I hire my own attorney, right? So like Alyssa's attorney in that scenario is in cahoots with my attorney, okay? This actually comes up more than one of the parties not having counsel, where one of the spouses, the money spouse, the spouse who wants the prenup, basically finagles the situation so that the other party gets an attorney who's just gonna, yeah, go ahead, yeah, sign this, go, make minor edits to the agreement and not really give Alyssa proper legal advice. The statute specifically says, consult with independent legal counsel. I have experienced this in cases I've been involved with where a trial court has interpreted independent as meaning, not the former law partner of Matt's attorney, who's, they're best friends, and that attorney didn't really look out for Alyssa's interests. So it really should be independent legal counsel. That doesn't mean that in the Matt and Alyssa scenario, Matt couldn't pay for Alyssa's attorney, but there needs to be a wall built up, meaning I have no right to know anything that goes on. It's truly independent. In that scenario, I'm only paying the attorney fee. Now, you can waive in writing your right to have an opportunity to have legal counsel. So a defense to this unconscionability argument could be that there is a waiver in the document about legal counsel. And I do see those in agreements. And oftentimes I see those, and those types of agreements are typically presented like 2 weeks before the wedding. Like, hey, you're going to waive your right to have counsel. Our wedding's 2 weeks away. And then we go back to the first thing I discussed, which is if an agreement is entered into involuntarily due to duress, the wedding is right around the corner, a court will invalidate that. So those are prenuptial agreements in a nutshell. They tend to get a bad rap. You see there's actually movies about this. They're unenforceable, or what's an ironclad prenup? Prenuptial agreements in New Jersey, if you follow these things that we discussed, they are generally enforceable. That doesn't mean you will not incur legal expenses, because family law attorneys will find ways to argue, oh, well, that prenup should be set aside. Alyssa handles these cases as well, and she knows there is a fine line between a frivolous claim and one that has a scintilla of evidence. Lawyers are not allowed to pursue frivolous claims. They are allowed to pursue ones that have a modicum or a scintilla of evidence. And I find that in many prenup cases, even ones that have comported with everything that we've discussed so far, attorneys still try and challenge them. So I don't want you to be misled and say you're not going to have any expenses, divorce expenses, if you have a prenuptial agreement, because you still may, because your former spouse or soon to be former spouse may try and challenge it, even though we did everything the right way. But I assure you, if you do everything the right way, if you disclose all of your assets fully, both sides, you disclose your debts, you will have a much greater chance of having the prenuptial agreement enforced. And having litigation about the enforcement of a prenup is substantially cheaper than having a full-blown divorce trial about finances. So Alyssa, I don't know if you have any comments, but.
I just wanted to add that in a lot of our prenup cases, one side may try to challenge it, but generally that'll be the first issue that a court would address. And so, and generally they're upheld if they're done right. And as Matt said, he went through all the factors. In addition to the statement of assets, you can ask for discovery. You can ask for some additional information if you want from the other side, and what we do is if you're providing, what the account balance is, maybe we'll provide the backup statement or something so that there's no issue in the future, because it may not be worth the paper it's written on until 20 years later. And you need to make sure, what do you have 20 years from now? We have a case right now where one of the attorneys passed away because they were married 25 years ago, and the other attorney's no longer practicing. So it's really based on what these two parties saved and what they kept. And so it's very important. The more you have and the more you keep, and just make sure it's in a safe place. And the only other thing I wanted to address is that the prenuptial agreements can also address, what happens if someone passes away. You can agree to waive your, like spouses have an elective share. You can waive that in a prenuptial agreement. And so those sometimes become an issue. And I'm sure, Matt, you've seen this too. And that's a little bit harder because one party is now no longer alive. And they say, well, they told me that they wanted to, to rescind the prenup, or they ripped up the prenup, right before they died. And so that may be a little bit harder to prove, but again, the prenuptial agreement can address those circumstances.
And Alyssa reminded me of something that we do, and I at least advise clients of this, and I think Alyssa does as well. Regardless of who you hire to do your prenuptial agreement, if you are the party who we call the moneyed spouse, okay, the one who has the assets that are really going to be protected. It might be both people in a prenup, but let's say there's only one party that really has the assets. That person should, and there's no excuse not to do this. Everything is digital. You have pretty much unlimited storage in Google and OneDrive, whatever it is you use. You should print out and save a statement both the month before your wedding date and the month after your wedding date and save those statements of assets. So if you have Chase or TD Ameritrade, 401k, you have a valuation on a house, print all of that, save it, lock it away, hope you never need to use it, because depending on how your prenup is written, you may need those statements in the future to establish the exemption of the growth on the value of an asset that's included in a prenup. And we're going to talk a little bit about that. I think that's the next subject that we're moving on to, premarital assets, gifts, inheritances. But just conceptually think about that. If you have a brokerage account and it's in an ETF, a Vanguard 500 fund, something like that. And when you got married, it was 100,000 and you included in your prenup, okay? And you have a crappy attorney who doesn't then say, all growth on that is exempt, okay? And this is going to dovetail into one of the things Alyssa is going to be talking about, and I'm going to be talking about. You may need to go back in time 15 years from now when your divorce is kicking off and say, well, wait a second, I had 1,000 shares of that. I had an automatic dividend reinvestment plan. I've never contributed another dollar to it during our marriage, and therefore the entirety of it is exempt, even though my attorney flubbed up the premarital agreement, the prenuptial agreement. So if you save those statements, you can prove what the value was at the time of the marriage, and you may need that in the future. I see other questions.
I think the question, though, kind of relates actually to the next topic you're speaking about. Premarital assets.
Yeah. So I see a question regarding a home that is owned premarital by one of the people who, one of the parties to the relationship. I'll use a hypothetical. I'll use Alyssa and I again as examples. Let's say I owned a house, and as of the date of the marriage, I had put in $500,000, and there was still a mortgage on it, okay? Alyssa and I get married, whether it's in the prenup or let's assume it's not in the prenup, okay? And let's say we get divorced a year later, okay? And let's say during that time, Alyssa and I both contributed towards the property taxes, and a question arises, is that house premarital? Do I get back my down payment? Do I get back my contribution to it? Meaning the person who owned the home prior to the marriage. There is no statute that says, yes, you get it back. No, you don't get it back. And we're going to talk about this broad subject. There is an equitable distribution statute in New Jersey. The key word in there being equitable, which is synonymous with fairness. And so I generally tell people when they come in for consultations, look, the longer period of time you are married, okay, if you don't have a prenup and you commingle a premarital asset, okay, so you have a house that's premarital, you live there with your spouse, you use income during the marriage to pay the mortgage or property taxes or fix it up. The further you get away from your wedding date, 3 years, 5 years, 10 years, the more likely it is that you're not getting back your down payment. I mean, Alyssa, would you disagree with that?
I would agree. But I would also add that if it also depends on the timing of when you buy your house. If you buy the house 3 months prior to the marriage in anticipation of the marriage, right? And you're buying it knowing that you're going to get married and it's going to be, it's part of the marital enterprise. You're going to be living there together. You're also going to have a really difficult argument.
Yeah, so I think that kind of answers the question. So broadly speaking, if you've been in a long-term marriage and you do not have a prenuptial agreement, you may, again, keyword being equitable in equitable distribution, you definitely have an argument that you should get a disproportionate share of the equity in the house. But again, I think the further you get away from your marriage date, the less likely it is you're going to get back 100% of what the value was as of the date of your marriage. I see another question. Let's see.
Right. And it also depends on the spouse that's living there. Are they putting in there's a published case where someone put in, like I said before, sweat equity, right? They renovated all of the bathrooms of the house or did something that they put in their time and their energy, and it increased the value of the house. And so, should they be compensated for that separately, even though their name's not on it or they didn't own it beforehand?
Yeah. So we're going to move on to that. That was a great, we did not plan that. That question was a good segue into the final topic of part one of this, which are, and Alyssa and I are going to divide how we speak about things, but premarital assets that are not in a prenuptial agreement and or gifted and inherited assets, whether they're in a prenup or not. Okay. I'm going to start, I'll go with premarital assets because this is sort of what the question was. And this includes business interests that are not included in a prenuptial agreement. So let's go back to the example I gave about the brokerage account that has a Vanguard 500 ETF fund in it, okay? And I gave Harlene this example when we were preparing and she chuckled a bit, okay? Let's change this, okay? Let's say I have a fund like that, but it's not a Vanguard fund. It has individual stocks, okay? And let's say I am a physician who's very successful. And let's say over the course of a calendar year, this is not an exaggeration, I traded $32 million worth of stocks, both gains and losses, to net $1,000 of gain. Real world example to everyone who's listening, okay? Guess what? Even though that account was premarital, the amount of time that I, the successful person who had all of this money and I was trading in it, the amount of time I dedicated to doing that during the marriage turns that asset into an active asset, okay? So when you're analyzing a premarital asset and whether it's exempt when you get divorced 15 years later, the key determination is, number one, is it an active or a passive asset? So a passive asset would be a Vanguard ETF fund that I never touch. The dividends get reinvested, it goes with the market. If I don't trade in that account actively, and I'm talking actively, I don't mean here and there, you know, maybe you rebalance it once a year. I mean like you're a day trader or you're weekly engaging in efforts towards it. If you stay away from that kind of conduct, you don't necessarily need a prenup to make sure that your premarital account is exempt, okay? The growth on it as well, okay? But you will need your statements because you're going to need to prove what the balance was when you got married, and you're going to need to prove that it was actually passive during the marriage. Let me take it to a different subject. This comes up more frequently, a business. Alyssa and I are getting married. Alyssa owns a business, okay? She inherited it, and she's going to talk more about inherited, but let's assume she does nothing in the business. It's a family business. She gets a K-1 every year, but she does nothing because Alyssa's a lawyer and the business sells flowers, okay? It's a family flower business that Harlene owns. I'm joking, obviously. So if Alyssa doesn't do anything active in that business, okay, same analysis applies. The growth on the value of that business during the marriage should remain exempt because Alyssa's not actively doing anything in that business. Her efforts during the marriage aren't being expended. Now, you may run into an issue if the K-1 throws off income to Alyssa and Matt, okay? You may run into issues about using marital income to pay the taxes on Alyssa's K-1. That's like a discussion for another day, but the business itself will remain exempt. Change the situation. Alyssa works in the flower business. She goes there every day. She has a 10% interest in it. And the value of that flower shop was $1 million when Alyssa and I got married. And now it's worth $10 million. It grew to $10 million during the marriage. That $9 million of growth is in the pot. It's in the equitable distribution pot. That doesn't mean I'm getting $4.5 million of the growth. Doesn't even mean I'm getting 2 or 1 or even 500,000. An analysis needs to be conducted based on Alyssa's share in the business, based on Alyssa's actions in the business. And I'll just throw one other thing before I toss it over to Alyssa. Facts matter when you go through a divorce. Facts truly matter. The law matters, but facts matter. So in my flower shop example, if Alyssa worked there every day, but it's Harlene who has a 10% interest and she developed some artificial flower that took the business from $1 million to 20 million, Alyssa would have a really strong argument to say, it wasn't my efforts as, you know, a bookkeeper in the business that expanded the growth and value of the business. It was Harlene's invention of this silk synthetic flower that, you know, everyone loves and celebrities are buying. So you need to think about those kinds of things if you do find yourself in a divorce without a prenup. But we could have avoided this entire 5-minute discussion if you had a prenup that exempted that business and the growth on the business in its entirety. And now I'll turn it over to Alyssa.
And I just want to add one thing. There are assets that are also a mix of passive and active growth. Like the house example, for instance, like I said, if you're putting your sweat equity into the house and you're maintaining the house and that's increasing the value, but then there's also a housing boom over the last year and that contributed toward the growth of the house, you have to then try to figure out, well, what was active, what was passive. You may need to get an accountant in there to help figure that out and carve that out as to which part, is subject to equitable distribution and make those equitable arguments there. So I think the last thing we're going to talk about, and it's relating to what Matt just discussed, is, gifted and inherited assets. So if your family gives you a gift or an inheritance, whether it's before or during the marriage, generally, again, that's exempt, and that includes any passive growth on that. For example, like an inherited IRA from a family member, if you don't touch it and there's just passive growth on the account, that should remain, separate property, regardless of whether there's a prenuptial agreement. But there are situations that a gift or inheritance, while maybe initially exempt, can become a marital asset. For instance, if you get an inheritance of $1 million and you decide to take it and put it into a joint account, and then over the next 10 years, money is going in and out of that account and it's nearly impossible to trace, that's probably going to be considered, it's going to be very difficult to make that argument. Now, there's a case that says if you put it in basically as like a placeholder, you take the inheritance you receive, you put it into a joint account for 3 days while you create your separate account, and then you move the funds. The court has said that that doesn't change the quality of that asset, right? It doesn't turn it into a marital asset because, you had it in there for 3 days. That's a lot different than 10 years. And again, money's going in and out, in and out. Again, if marital funds are used to maintain it, you're gifted a car from a family member, but then you're using marital assets for the insurance, for repairs, for maintenance. Again, there's equitable arguments to be made there, and it can give your spouse an interest in that asset. Taxes for capital gains, Matt touched on this briefly. If you're paying capital gains with marital assets, for 10 years, let's say, does the other spouse, do they have an argument to say that the asset isn't exempt? Do they have an argument to say, well, they should claw back on the taxes that were paid from joint funds? Do they have an argument to say, well, if that money wasn't paid for these taxes over the year, then there would have been interest on it? And there's a lot of arguments that can be made there, again, which can be avoided if you have a prenuptial agreement prior to the marriage. If it's an active asset, and by the way, income from this separate asset may be considered even if the asset itself is exempt. So if you don't have a prenuptial agreement, and even if you keep this asset in a separate account, you don't touch it, you don't commingle it, it's a separate asset, but it throws off income of $50,000 a year, well, it can be considered for alimony. The income itself can be considered, it will be considered for child support. If you have a prenuptial agreement that says it won't be considered for alimony, or there's a waiver of alimony, then it wouldn't be considered there. But just because the asset itself is exempt doesn't mean that the income that's thrown off from it would not be considered for other purposes. And so the last thing is, I guess, if you are entering into a prenuptial agreement, if you're expecting a gift or an inheritance in the future, is that something that you should address in a prenuptial agreement? I say whatever you can address, especially if it's on the horizon, if you're part of a trust and you know that in the future you're going to become a beneficiary, this triggering event's going to happen, you should address all of that in the prenup to the best extent you can. You can have a catch-all provision, and as Matt said, waive off on everything else and whatever could happen in the future, but you're giving that person a better argument to make if they had no knowledge of this large inheritance you're going to receive, and you kind of knew it was on the horizon, but you didn't really want to disclose it. Anything I think it's better always to disclose on there, because it then opens the door. But obviously, there may be circumstances that you don't know that you're going to receive a big inheritance or a large gift. And so, again, if you do, and you then accidentally commingle it or something else, your spouse may be entitled to that. So I don't know if there's anything else you wanted to add there, Matt.
Yeah. So as I mentioned at the outset, prenups are a taboo subject, right? You don't want to go into a marriage, oh, this is going to fail, and now we have to plan for the failure, right? Try not to look at it that way. There clearly is a tendency to think that way. There's a visceral reaction when someone presents you with a prenup or you present someone with a prenup. There are other things that people build into prenups so that their future spouse feels comfortable. For example, a sunset provision. So some prenuptial agreements automatically expire after a period of time. Some prenuptial agreements are sort of tiered, meaning if we get divorced within 5 years, by the way, then your spouse is checking their watch as the 5-year mark hits, like, oh, are they going to file for divorce or not? After 5 years or 10 years. I've seen ones where if the parties are married for 25 years, the prenup essentially is extinguished. It goes away. It's not worth the paper it's written on. I've seen ones where from 5 to 10 years, 10 to 15 years, the financial dynamics change. And so if you're entering into a marriage and you present your partner with a prenuptial agreement and they basically say, like, no, I'm not doing this, that doesn't need to be the end of the discussion. I'm hoping that the two of you have good enough communication skills where you can both express your concerns. And maybe the way to get around it is to have us, sunset provisions or tier provisions, so that you both feel protected, and so that the one person, maybe the person who doesn't have as much money, doesn't feel like, well, wait a second, I'm going to invest myself in this marriage. You're keeping all of your money, and you could just leave me in 20 years, and basically, I don't get alimony. I don't get any of the assets that you've had that have now grown to $10 million. So my point is sometimes these are a negotiation. And if you have counsel sort of going back and forth and also an open dialogue between your future partner and yourself, they tend to work out. I don't know if there's a question. No.
Does anyone else have any questions, or do you have anything to add, Harlene?
Yeah, so, I just want to add that, for tax purposes, I see this, I thought this was a really great webinar to do, because I have a number of clients who are very comfortable, and some of them have trusts which they've set up for their children. I have some clients who I do their tax returns, and they have grandparents who have trusts, and they have money thrown off every year from these trusts. They could end up, with dividends over $50,000 a year. So I think that it's important when you're looking at young people with assets, that are growing, and that they, in terms of specifically inherited assets, I think it's really important to address some of these items. And even as a parent or a grandparent, if you have members of your family or friends who are getting married, I think it's a good thing to bring up to them, regarding a prenup or a cohabitation agreement. And the other thing that we didn't really bring up, but I do see, is 401k plans. So if you have a 401k plan, that's a whole other topic. I know that, in terms of divorce or, before you're married, but you definitely want to make sure that that's addressed in terms of, if there are, if you're not married, and how do you handle your 401k? I think that's also something that I get a lot of questions on that to look at. So I think we brought up a lot of great stuff here. And if you have any other questions, you have our emails available. I know there was one thing I was going to follow up on regarding the real estate taxes in New Jersey, which I will. So we thank you for attending. Alyssa and Matt, do you have anything else to add? I think we're good.
think that's it
No.
on our end.
No,
Okay.
thank you. Thank you.
All right.
Thank you for having us.
So I think,
Oh,
Laura,
I'm
you want to talk
sorry.
about the
Yeah,
next
yeah,
part?
no, go ahead. I was just gonna say, don't forget that part 2 is coming up on March 3rd. And during part 2, do you guys want to just kind of give a little overview of what you're going to talk about?
Yeah, we'll be talking about post-nuptial agreements, which are agreements that people try to enter into after they're married. And generally, we're going to be talking about divorces and how they work and the types of issues that arise, you know, when you're getting divorced and you don't have a prenup. I think the focus will probably be those people without prenuptial agreements.
Great, thank you. And then for everyone, the contact information is here. Hopefully you got that. If not, just give us a call or email and we'll put you in touch with Alyssa or Matt. So thank you, everyone.
Thank you. Have a nice day.
See you on
Have a
part
nice
2.
day.
Bye.
Bye.